What is up, YouTube? What's up, guys? The Composer Trader here, and today I want to be talking about how you could have netted well over 15%. I think almost close to 20% trading TCT schematics in the past 4 days on Bitcoin alone, because the price action and the price behavior on Bitcoin has been absolutely incredible. Personally, I only managed to catch 2 out of the 4 trades because one wasn't really that good enough from an RR perspective, and the other one of the best ones, happened during Asia. But I want to show you guys the opportunities that presented themselves for you all to learn from. Okay, so looking at the Bitcoin chart right here, if we build some context, I think most of the people that follow me on X, and if you're not, I highly advise you to follow me on X, which is where I'm most active every single day. You guys kind of know about my macro idea about this being a macro distribution potentially, and we had the range high right there. We had all that very easy to sweep buy side liquidity, which to me indicates two things. The move up is going to be fairly quick and aggressive because there's nothing in here that can make price reject, while this is very obvious resting buy side liquidity, giving the market makers the opportunity to go and fill those sell orders at those deviations. So I'm looking on the high time frame for a macro distribution here. Can even have bigger deviations, as long as we stay inside of that DL2. But overall, I'm thinking the purpose of this could be a macro distribution. But either way, even if that's not the case, the context, the moment we take that high, is that we have a new all-time high, which is obviously well over the news. Bitcoin making new all-time highs, Bitcoin having the highest weekly close in history, the highest daily close in history, all that stuff, which is obviously usually setting itself up for a perfect trap. So I want you guys to understand the significance of the location that Bitcoin was in at the new all-time high here, because if we follow the market structure, which is simply making higher lows and higher highs right here, right, if we're following that structure, we can see this aggressive V-shaped price action coming into that sweep of the range high. And then right here, we get the higher low for the higher high. And then we actually see some sort of a range create where if you look at this higher low for the higher high, you can clearly see the difference between the price behavior in all these market structure pools right here. If we highlight them, you can see this red here. You can see these red highlighted areas kind of representing that V-shaped market structure. And then if we want to draw it from the high to the next high right there, you can actually see the difference. So from high to high right here, you can actually see aggressive expansions, explosive moves indicating market structure. Here you can clearly see that sideways price action. And this is where I see most people actually go wrong trading these TCT models, which is that they're trying to force ranges using the equilibrium touch to confirm it, when it's actually just market structure. Or it's actually just, it's market structure. And a range, even though we have the technical rules to confirm the range, a range in its core foundation is horizontal sideways price action. And we can clearly see that right here. Okay, we can clearly see that happening right here. Zooming in on this schematic, if we see how it created itself. So we had the initial range high, we have the initial range low, and then we have the touch of the equilibrium confirming the range. From there, we got to move up, and we deviate that range high, indicating a potential distribution in the making. Now, if we pay attention how we even made our way up to that range high deviation, you can see that we're leaving all of these lows intact, where you have this low, that low, that low, that low. You're leaving all these lows intact right here. And you can clearly see that liquidity curve building up where we have all these lows, 1, 2, 3, 4, even these internal lows here that aren't even market structure pools, 5, 6, 7, 8, 9, 10. We can see price curling up here, leaving that sell side liquidity below, which is obviously a very nice way of making that rotation back up to the upper section of the range, because we're leaving sell side liquidity below. We're grabbing buy side liquidity above that range high, and we know markets rotate from liquidity to liquidity. So the slower the move up, the more liquidity we leave below, the easier the move down is going to be, which is good if we're looking for distribution shorts. And right here, we get our tab 1, we get our tab 2, and then if we zoom in here on the lower time frame, you can actually see that you, technically speaking, already get some sort of distributive price behavior, where this is on the lower time frame, on the second time frame, kind of like a lower high for a lower low, and you already grab the liquidity from that. You basically grab like almost every high except the actual high from the range. And then right here, if you measure that market structure, making higher lows and higher highs following the 6 candle rule, we get that break of structure right here, back to bearish, and then you grab the extreme liquidity of that downtrend right here. So again, extreme liquidity is usually the first lower high created after putting in the second tap. Now, this is not a lower high on the 1 minute because it doesn't follow the 6 candle rule like this, but on the lower time frame it is. You break structure and you even come back for the first lower high for the lower low after that potential third tap here on the lower time frame. So you can really see that price is taking that buy side liquidity at the highs and then breaking structure back to bearish right here again following the 6 candle rule, and then you're getting that rotation back down. Now, the only problem is with this range is when you're looking and zooming in on these tabs, the time displacement is obviously very minimal. And what do I mean with time displacement? Is basically the time spent between the second and the third tap. The time spent in between the second tap and the third tap getting created. So we can see the distance between tab 1 and tab 2 is way bigger than the distance between tab 2 and tab 3. Now, we can validate a model with lower and little time displacement if the return to zone is good enough, okay? If you can draw that return to zone straight into the market structure low, confirming that lower time frame third tap, that can technically already be a valid model. There's just one thing you need to be aware of, which is that your low time frame model could go over in a higher time frame model. And what do I mean with that? Well, if I zoom out here and we check what is the time frame that our range is valid on, well, we can see even if I zoom out on the 45 minute, that tells me everything that I need to know. Because on the lower time frame, you might have a tab 1, a tab 2, and a tab 3. But if I go on the 45, and this range is valid on the 45 because you can draw the 6 candle rule here, those tab 2 and those tab 3, they disappear and they merge together into one tap. And then you have one move down. So what you got to be careful of if you're trading a tab that's tighter with the time displacement, that price later on can come back for any extreme supply for a normal higher time frame model 2 distribution. And this is where a nice little secret sauce comes into play, which is one of my extra high probability models, which is the combination of combining a low time frame model with a high time frame model. Before you go and further watch this video, not even, you can watch it after this video, go to my YouTube page and check out the SUI long that I took, the exact long on how I literally longed the exact bottom on SUI. It's the exact same model like this, just from an accumulation perspective on a higher time frame. But the overall price development is the exact same. Now, personally, I did not enter this trade right here on the lower time frame third tap because the break of structure was a bit sketchy because price had to travel a lot of distance in order to even break that structure to begin with. I wasn't watching it here Thursday night. And overall, the range was smaller in duration. We kind of had like only 15 hours. And I wanted to see just a bit of more of a higher time frame model because overall, we were in price discovery. Okay. Now, what happened here is that price retraced back down and left behind extreme supply in the upper section of the range, which on the lower time frame, you can see the way we confirmed that break of structure right here. We left behind that inefficiency. So if you follow this structure pool, you're making a high, higher low, higher high, break of structure, creating this as your structure supply right there. And that is also your extreme supply. Now on the lower time frame, it's structure supply. If you zoom out to like a 10 to 15 minute time frame, this is probably an order block. You can see right there on the 10 minute time frame, it's an order block right there in that pivot point. And therefore, price can come back up for that and then on the higher time frame get a normal 3-tap model, where on the higher time frame you have a 1, you have a 2, you have a 3, and on the lower time frame it's an extended distribution model, where you already have a 1, 2, and a 3 right here, and this is the 4th tap, which is valid. You also have 4 taps in Wyckoff models. From a distribution perspective, it's called an LPSY. Okay, LPSY right there, right here. So what's just important when you're trying to trade this model right here, because this is the better entry, because it's stronger to have a combination of a low time frame and a high time frame model than only just a low time frame model. So I wasn't really interested in trading the low time frame model. Only if we were to go over into some sort of a high time frame model would I actually be interested. Now, mind you, I am not awake during these times. It was 12 p.m. right here. We got the retest around 2, 3 in the morning. So this is all me talking about it in hindsight, but I've traded these models a million times. Everybody knows this is the way to enter them. And this is models I would 100% enter. But you can kind of see here on the lower time frame that you get this model 1 accumulation schematic. And you will see it all the time where, you know, you get your distribution model, you get your second tap creation on the higher time frame, and then you get these low time frame accumulation models where the purpose of the low time frame accumulation is literally just to cause the move up for the higher time frame third tap of the distribution. So we get the move down, we get the lower time frame accumulation. You can see that buy side liquidity getting built up, and then 1, 2, 3, rotate back up straight into that third tap POI. And here we can see price making higher lows and higher highs just like this. And then the moment we tap into that POI, that's where we look, okay, where is that market structure low? And we're waiting for a convincing breaker structure. Now, you need to ask yourself, is this a convincing breaker structure right here on the 3-minute? It's a 3-minute higher low right there. On the 5-minute, the 6 candle rule disappears because you only have 1 candle going down. So it's definitely a 3-minute pull. Is that a convincing breaker structure? No, because you barely have any closes below while also having this low time frame structure demand. So it could easily be a fake break to then go higher, take that high once more, and then get like a proper aggressive break. But that is not a quality breaker structure. Okay, you want a candle close with some good price displacement below that market structure low and kind of like indicating that the demand is going to fail. Okay, so that's not the proper breaker structure. So we simply look at the new market structure low right here, and now we can see that we get a very, very high quality, aggressive push down breaking structure. So that's what you want to see, right? Now, again, you had some demand right below it. So would I want to enter on a break this aggressive where my stop loss needs to be above that high? Not really, because my RR is very minimal right here. Okay, my RR is not the best if I enter exactly on that candle close. While at the same time, we created structure supply while breaking structure. And since we're trading a relative lower time frame model, I'm going to be picky, okay? I'm going to be picky. So it's either going to be my entry or no entry. So we get the breaker structure right there. Right here, get the breaker structure. The moment you break the market structure right here, that's when you confirm your 1, your 2. Let me make that as a better one. The moment you break the structure right there, you have your 1, you have your 2, and you have your 3 right there. Where on the lower time frame, this tap also counts. So it's a combination of a higher time frame model 2 and the lower time frame extended model. Now, you created and continued that return to zone on that retest right there, so you can truly draw a return to zone straight into that market structure low right there. The moment you break the market structure, the order flow objective is to come to the range low prior to taking out that third tap high. So the moment you break the structure, you confirm the rotation back down to the range low, and your third tap should be protected. Price should not go back above that point again. So then when this is the only resistance left, you can literally just set a limit order here or market order on the rejection. Price came back in there, rejected, came back up once more, which it actually had a reason to. So you shouldn't be scared if you enter here and price comes back up again, because within that structure supply, you had refined supply, which is a 3-minute order block right here. So you tapped the structure supply and then came back for the order block, and then price started going down. Now, what's so beautiful about this model is, again, I traded the exact same model when I was logging the exact bottom on Sui. You can find that video literally on my YouTube, what you're currently watching right now. But also, what's so beautiful to see is the fact that you got a news announcement that absolutely dumped price way lower. Because the technical target of your Wyckoff distribution model right here is the range low. And again, if you're watching me for the first time, I highly advise you to go and check out the mentorship first, because I'm not going to explain every single detail about a Wyckoff model in every single YouTube video. Okay? And the mentorship you can find on my YouTube, on this channel, underneath the playlist section for free. Okay? But it just goes to show right here that price action is leading. We were already expecting price to go lower. We were deviating the all-time high on the left there. It's the ultimate trap POI. This is the level. This is literally the level on the chart where you're seeing hundreds of social media posts of bullish Bitcoin conferences and Bitcoin bonds getting created and strategic reserve additions and billions of dollars flowing into the market and Larry Fink being bullish. It's like, that's what's going on in this distribution. So they're using you as an exit liquidity, right? So yeah, the news got released, price dumped down aggressively, which was expected. Using USDT dominance, which is a great metric to kind of trade with Bitcoin because they're anti-correlated. You could technically extend your target, but for now, we're just going to count this as a proper 4+% net gain. But because of the context of you deviating the all-time high, you can leave a runner overall. And you can see it even went down as low as like 14 to 15 RR. But we're just going to count it as the way we would normally trade it because we couldn't, predict such an aggressive expansion at that exact time. So that's a nice 4% net gain on a high probability TCT model right there. And what's so beautiful is that literally you went straight from distribution into accumulation. And this is actually what we traded live inside of the Discord server. So we got the distribution, we got the aggressive sell-off, and then we got the lower high for the lower low. Guys, I can already tell you right now, when you have an aggressive sell-off, 80% of the time, especially on the lower time frame, the first lower high for the lower low after an aggressive sell-off is not the starting point of your your range. That's the continuation of the aggressive sell-off, and then the second point is usually the start of your range. So I saw some people draw ranges, right? I saw some people draw ranges starting from this point, but that's the first lower high for the lower low. And you can see when you look at this, right, and when you compare the price action in between this tab 1 and tab 2 in this box versus the price action in this box between the lows getting tapped, you can clearly see where the range actually starts, which is from this low on and not from that low, because that was still the market structure continuation. And from a Wyckoff perspective, this is what usually called the PS right here. You can search up a Wyckoff model. It's usually called the PS, and then you actually go over into your proper range. So we saw the lower high for the lower low, and then we saw the range creation over the weekend, okay? Beautiful range creation over the weekend. It's like, I cannot make this more perfect. This was one of the easiest trades I've taken in a long time. So we had the range low, we had the range high, and then we got that deviation one. And you can see that we are just building this beautiful liquidity curve. Beautiful liquidity curve right there. And we get our top 1, we get our top 2, we extend that range low to that deviation low, and then we can see we got that top 3 right there. Okay? Indicating a potential Model 1 accumulation in the making. And let's zoom in right here. Now, in order for us to confirm our accumulation model, we need our market structure to break back the bullish. But when we look at our 2-minute, we're simply making lower highs and lower lows while creating structure supply on the lower high for the lower low. So only looking at the 2-minute chart, because on the 1 minute, there's no structure down here. So the 1 and the 2 are kind of the same. It's tempting to use as structure right here, but you don't have the 2 consecutive candles going down. So technically, you can't. But you're making lower highs and lower lows. And in order to confirm the model, purely from a 2-minute market structure perspective, you need to break that high. But if you break that high, the RR isn't the best. And this is where a variant of entering comes into play that you need to be aware of. Because if the model is looking extremely good, if the buildup of the model is looking extremely high probability, which in this situation was most definitely the case with this beautiful weekend buy-side liquidity curve where all these highs are just getting stacked up as lower highs right here, lower high, lower high, lower high, lower high, lower high, all these lower highs. Lots of buy-side liquidity of weekend stops while creating third taps literally in your Sunday PM session. Timing is impeccable. But I need to grab a Wyckoff schematic for this. Wyckoff schematic. So what we usually do, when we're trading a Model 1, this is the PS I was talking about, by the way, that first market structure continuation. What we usually do is you have your tap 1, you have your tap 2, and you have your tap 3. And we are trading this market structure downtrend, and we are waiting for that breaker structure to happen to confirm the spring, to confirm the third tap. So imagine this high right here being that 2-minute high. This high right here, that's your 2-minute high. Imagine that being this high right here. And we are right now in that third tap. And you can see price going up and then making a lower high. And you can see price right here. You can see price going up, making a lower high. So you have the 2-minute high, and then you see price going up, making a lower high. 2-minute high, see price go up, making a lower high. If the build-up of the Model 1 accumulation is super high probability, you got to be careful and aware that you can trade the test. The test is the higher low prior to breaking your main structure back to bullish, which is a very awkward point to trade in the chart because it looks like your model is failing until all of a sudden it is not. So again, the test is the higher low prior to breaking your main market structure point right there. And the way to confirm an entry is simply by viewing this as also a Wyckoff point. So this is then the Wyckoff point. That's a Wyckoff point, and we are observing the market structure coming into that Wyckoff point. And for the test, we do the exact same. So without having broken your main structure back to bullish, which is that high right there, you're observing the most local retracement coming into that, again, Wyckoff point, which is the test. And then we can see that if we clean this up a bit to keep it clean, then we can see that price is making a lower high for a lower low, and then you see the buyer step in. I want you guys to understand that at this point in time, you are anticipating on market makers, exactly right here, anticipating on market makers stepping into the chart, bidding price higher. So it may look awkward in the moment, but the moment you see these aggressive bullish candles right here, with a proper breaker structure with good time displacement, and you have no resistance between this high right here and your main market structure high right there, you can confirm a rotation back up already starting at that point. It's trading the test of the Wyckoff model, okay? And then you can put your stop loss there locally, and then from there you can target the range high. And this was such a clean 5RR net gain on the account on the Sunday PM session. And you can see right here, if I'm going to my channel inside of the Discord server, you can see right here, Composite Trader Crypto Setups. We were looking at exactly this entry. You can see the Model 1. You can see the entry. We're targeting 109.439. And then within no time, I even said if price mitigates extreme demand, gets a level 2 breaker structure, I will throw my stop loss to the retest low. We didn't even get that. Within no time, price absolutely smashed towards the take profit target. And this was such a clean trade. We took it with the entire community. It was beautiful. You know, you got to realize, guys, This is 5% on your account balance in a single trade in just a few hours. That's half of like a prop from account challenge pass. Combine that with this distribution straight into accumulation, you are up 10% for the month in the span of 3 days. If you make 10% a month, if you've watched my video on how to turn 1,000 into 100 million, you know the power of making just 10% a month, and you can make that in back-to-back trades, trading the exact same thing, just the opposite side now. This was distribution, this was accumulation. It's such beautiful price behavior. It's absolutely insane. Okay, absolutely insane. But it gets even better, right? It genuinely gets even better, because on a higher time frame, right? On a higher time frame, if you zoom out, and I want to keep these drawings on my chart, if you zoom out to like a 4 hour, you can see that we are making this entire move, this distribution into accumulation, is just one move up, one move down, and we already came back to the equilibrium at that point. Because on the 4 hour, that's your uptrend. And then you can draw your range from high to low, and you can see that we came back to the equilibrium of that range. So I was looking at this as my main range, where literally the distribution on the lower time frame created the higher time frame range high, and the accumulation on the lower time frame created the higher time frame range low. And then I was looking at this total range right here, just like this. Okay, and from there, let's try and clean it up a little bit right here. Try and clean it up just a tiny bit. Just like that. And just represent the models like this. Boom. You can see, right? You can see that while breaking down there from that distributive range, you left behind structure supply right here. Okay, you left behind beautiful structure supply. And you can see that coming into that structure supply, we actually created a lower time frame model 1 distribution. So price is trending up, completing the accumulation model, taking that high right there, getting a higher low for the higher high. Again, we're trending up. We're seeing that build up start from there. You can draw your range now. Let's get rid of this EQ. You can draw your range from high to low, because you're trending up. You have your initial range high, you have your initial range low. You get that deviation 1. You come back inside. You can clearly see the horizontal price behavior in this range. And then on New York OPA, you can see where the orange candle starts is when New York opens. You come down, push up straight into that third tap POI, and then get your model 1 distribution, get the breaker structure. Right here on the lower time frame, you got the breaker structure, and then you dump down, and guess where you dump down to and where you bounce from? Market maker demand, structure demand right there at the third tab of the accumulation model. And where did you reject from? The market maker supply. The supply right there of the lower high for the lower low from the distribution model. It's just perfection. It's honestly perfection. If you zoom in here on the lower time frame, you saw that you had that beautiful breaker structure right here on the lower time frame. But again, this was not really worth it from an RR perspective for me personally, because you would have to something like this. Even if you have an extended target, which I cannot predict at that moment, it's not really that good enough for me to take, but it's nice to see it get accepted. And came down straight into that market maker structure demand right there into the lower section of the range and got a bounce from there. And this is where we create our last range. Because just like on a higher time frame, this distribution and this accumulation create the higher time frame range high and range low. Internally speaking, on the higher time frame, if we zoom out here on like the 1 hour or 2 hour, whatever you want to call it, I know it's getting a bit messy on the chart right now, but bear with me. On the higher time frame, this is one move up, one move down, and one move up. So it could be that if you follow this structure trend right here, making a higher low for a higher high, let's make that nice and thick so it's visible. You simply follow the rules, uptrend, higher low, higher high, draw the range from high to low, and then the purpose of that low time frame distribution could again be to create the mid time frame range. And this is where it kind of got creepy, because we literally, what you're seeing right here, you can already see initial range high, initial range low, get your second tap, get your third tap, get the rotation back down. That's the most recent short that we took on Bitcoin, where going to my channel right here, crypto updates. Oh, I talk a lot in here. Let's try and find that. You can see that was the short that we took. The most recent short. Here. Trying to find it. Here. Look at that. So you can see that this was at 9 in the morning, the 27th of May. And you can see we have the accumulation right there. We have the distribution. We're seeing the rejection from that structure supply. We're seeing the bounce from the structure demand. And I'm talking about literally, you can see it right here, getting a move up and creating a new distribution model right there, entering and taking this way lower, like way lower potentially. That's exactly what happened. If you see this drawing, you go back to the chart right now. Like, it's not that my drawings are always that accurate, but this was scary. Like, it's exactly what we got. It's literally, boom, drawing, distribution. It's just perfection, honestly. It's like, it's, we got the tab 1, we got the tab 2, and then we got the tab 3 there on the low time frame right here. You got that 2-minute order block acting as your extreme supply. And then right here, got that market structure low break. Now, you actually got some sort of TCT and TCT here. I do have to say, the return to zone in this trade was definitely less nice. It was lesser of a probability than the other ones. Because the return to zone was just worse. You didn't really have that many lows building up, and the time displacement was overall pretty tight. It's really the fact that you got that low time frame TCT and TCT right here, which really did it for me. That really, really did it for me, where I'm like, okay, you know, this tiny topping structure gives me the confidence that we're not going to get a fake break and we're actually going to get some follow through. Because otherwise it's just a buy to sell that breaks structure temporarily before, you know, potentially going higher. But that was really the convincing part for me. So I wasn't even aware of the breaker structure at the time it actually happened, because I was at training. But then the moment I left training, we were down here, and I'm seeing the structure supply created itself. And then we're taking out that local buy side liquidity that we left behind after breaking structure. Just like that. And that's exactly where my entry was. Right there. Stop loss above that high. And then I'm still in this trade as we speak. And we're currently absolutely nuking down. Let me see if I can pull up P&L shot right here. Yeah, look at that. Let me try and screenshot it. Last traded price, 106, 103. Boom. I'm still in that trade. Like right now, 106, 103. And we're simply checking how far this can take us, honestly. Because overall, like the context, you're at high. So my max target would definitely be around 100K for a take profit. And then again, if you go to the Discord, guys, if you're watching this video up until this point and you're not in the Discord, what are you doing? Honestly, what are you doing? Like, if you're liking the content, if you're trying to trade the way I'm trading, why don't just trade with me and see me apply these concepts in a live trading environment? You know, you can see we're shorting right there. Exact entry 109.869. You know, we're talking about we're pre-planning it here with the breaker structure. Like, daily updates. I'm just live trading here with you guys. It's as simple as that. I'm just doing my thing, elaborating on why I'm doing what I'm doing, and you guys can learn from it. Amazing community overall. It's like sharing ideas, pre-planning setups. Like, you want to be in here if you're watching the video up until this point. But yeah, we're currently coming down. I'm still holding that trade. However, I am watching for this to potentially turn into an accumulation as well, where this could be a potential. Oh wait, before I delete everything, okay, this could be a potential. Could have a potential long right there. However, this was the setup, and I'm currently still in it. So when I show you guys this, I want to know what goes on in your mind. Because you're seeing me trade the same model, a Model 2 distribution, a Model 1 accumulation, a Model 1 distribution, and a Model 2 distribution. You're seeing me trade the same accumulation and distribution models every single time. You're seeing it work in a live trading environment. You need to lock in. I couldn't manage to catch this trade due to timing, but this would have been 4% plus 5%. Plus another 5%. 15%. And that's if you didn't even extend this target. That's just like pure technical. It's like, guys, you only need 10% a month. This doesn't always happen like this on Bitcoin in the span of 4 days. I'm not going to sit here and say, oh, this is typical Bitcoin price behavior. But you have many different altcoins. It works in the Forex market, commodity market. There are so many opportunities every single day for you to compound those profits. Trust me, once you start to understand how this game of trading works, you will never want to go back to round tripping your spot backs. And I'm trading it all live, showcasing it in a live trading environment. Not in hindsight, no BS, just live trading and live execution through live streams and posts. So if you're watching it up until this point, also if you're already in the Discord in the free server, you need to understand these high probability models in depth. Invest in yourself. Watch the high probability lectures. A whole new world will open up for you. Okay? A whole new world. I'm telling you, from the bottom of my heart, if you can understand these models and then execute them consistently, which is easier said than done, because a whole trading psychology and mental aspect of it is going to come into play as well, which is where most traders struggle with. But the whole new world will open up. And you will never go back to round tripping spot gains. And you actually have something that is in your control that you can do and put in the work for every single day. And there's a famous saying, a trader will never go back to just being an investor. But an investor would be a trader. Oh, mic cut out. But lock in, guys. I love every single one of you. If you're watching it up until this point, you can find me inside the Discord. Link is in the description. I appreciate you guys. Peace out.